Well, the oil price is up nearly 2% today on US President Donald Trump's insisting that US allies stop importing crude from Iran. This caused a major concern in Asian markets with a general slide there. Well, to examine what this all means, I'm joined on the line by Jameel Ahmad. He's the Global Head of Currency Strategy and Market Research at FXTM. Thanks very much for joining us, Jameel. So why this reaction on the oil price today?
Thank you very much for having me. It's certainly been a very volatile day for the oil markets. The price of oil is now re-challenging its 2018 highs, and it seems like it's about to meet them possibly over the next hour or so. We're only just less than $1 away from the 2018 high, which would mean that this is the strongest level in the oil markets since the famous crash in the price of oil all the way back in the end of 2014. Now, what's driving the sentiment is this speculation and reports that US President Trump has ordered other oil importers to not take oil from Iran or face the risk of sanctions. And this seems to have really weighed on sentiment today, and the price of oil has surged as a result, and it's quite spectacular when you consider that just a week ago, oil prices were looking very weak. They were nearly $60 as a result of concerns over OPEC. Now, only 1 week later, the price of oil has rallied nearly $10.
So now, what impact did you see on affected currencies or currencies in general?
Actually, this has been quite a isolated move where we haven't really seen that much of an impact on the currency markets. And why this might be is likely because of these trade war concerns, our ongoing theme in the financial markets. They've resulted in a lot of risk aversion in the financial markets this week from investors, where investors are not so attracted towards taking on risk, which means they're less attracted to invest in emerging market currencies like the South African rand. And this is potentially what has delayed the oil market rebound towards actually relating into a rally for our commodity-linked currencies, such as the Canadian dollar, the Australian dollar, and other currencies that have economies that are reliant on commodity exports. So perhaps there will be a delayed reaction if these trade war concerns between China and the United States do weaken, as we've seen over the past couple of hours.
I want to digress a little bit and focus on the South African rand. You did touch on the drivers of the emerging market currencies. We did see the rand drop by over 2% today. Is that all a product of what's been happening globally, or are there any local factors that you think are also weighing on the currency?
It's mostly external factors. The global factors, which are a big concern for the markets right now, such as the trade war headlines, and also the ongoing resurgence we're seeing in buying demand towards the US dollar. Some local concerns over economic growth probably lagging behind its potential is not helping the South African rand, but we're seeing emerging market currencies as a whole across the globe are completely whacked by the resurgence in the US dollar over the second quarter. This has been a primary catalyst behind the South African rand weakening around 13% this quarter, which has basically reversed all of its previous momentum from Q1. And actually, there's only 2 emerging market currencies across the globe to date that have strengthened against the US dollar in 2018. This is the Colombian peso and the Malaysian ringgit. All other emerging market currencies in recent weeks have been really punished by the stronger dollar, trade war concerns, risk aversion, and a general lack of risk appetite from investors.
All right. So now back to the Iran story. Where does this leave the signatories of the Iran deal that the US pulled out of? Are they going to have to do as Mr. Trump tells them? What does this mean politically and economically, not just for them, but for everybody else?
This is a very interesting question. So if you look back to when President Trump pulled out of that historic Iranian nuclear deal of 2015, just a few weeks ago, other signatures within the same agreement, which included the European Union, which was Germany and the United Kingdom, and then we had also Russia and China were in the agreement as well. They all indicated in the hours following the Trump decision that they would stay within the agreement and that they had no intentions of pulling out and imposing their own sanctions on Iran. If you look a bit closer at the reaction we're seeing in the markets today, and specifically in the price of oil, these comments from Trump that he would impose sanctions himself on anyone who imports from Iran suggests that maybe something a bit different is going to happen. This is a real news development that's developing as we speak, and it's definitely a new theme in the financial markets today. So we're going to need to watch out to see what happens over the upcoming future to really provide an outlook as to what could happen next.
Okay, well, expect a call from us in a couple of weeks. Thanks very much, Jameel, for your time and your insights on this issue. That was Jameel Ahmad. He's the Global Head of Currency Strategy and Market Research from FXTM.